Michael Sullivan. I'm a former IRS agent. I worked there a decade. I was a teaching instructor for the Internal Revenue Service. I'm a national expert in IRS resolution, and I've been on all the major stations. Today, oh, by the way, welcome to my YouTube channel. My YouTubes are short, they're sweet. I get right to the point, cut the fat off. I give you enough information to be dangerous. One of the most common questions I'm asked is, why did my tax return get audited? Man, oh man, oh man, oh man. Yep. I'm going to go over the two most common reasons why tax returns are audited. The number one reason, with a drum roll, is your DIF score. Your DIF score fell out of the national average. What is a DIF score? What does that mean? What the hell am I talking about? A DIF score stands for a discriminatory index function number score. What that means is IRS, based on your income, IRS has put in all the key number indicators on their tax return, and IRS's computer algorithm scanned your return and found out, based on your income and information, that you fell out of the national average based on Americans who file tax returns given the certain factors on your case. So let's say you made $100,000 a year, and IRS is looking at your interest income, your business loss, different expenses that you take. Every time you fall out of the IRS average in a category, it sets up a red flag. Now, many returns set off red flags. Many do. So IRS adds up the total red flags with a numerical score. If your numerical score is a high enough score, IRS knows that there's probably low-hanging fruit for an IRS tax audit. That doesn't mean that it's right, but it's a good indicator based on all their research that that's a pretty good indicator it's there. So what IRS does is they go ahead and they have agents go to the different offices to review returns. They'll be eyeballed, and then they send those cases out for audit. Now, when the agent comes out, they may have a specific thing they want to look at. They may want to look at your whole return or just 6 items. The key is not letting them expand the item. You can't necessarily kind of change that course of action. But let's say we're in the year 2021 and they want to look at 18. You want to hope they don't want to get 19, 21, or go back a year. So the big reason you're going to get audited is your DIF score. The second is you've taken too many credits and IRS has flagged your return. These are the big two reasons tax returns go through IRS tax audits. IRS goes ahead and codes every line item on your tax return, and with the advent of new algorithms that IRS is putting in, they're going to know a hell of a lot more about everyone because they're getting a lot more sophisticated in grading tax returns for audit. It's getting to the point you got to be really tight. You got to know as close as you can what the DIF standards is how easy it is to fall out of the national standards. If you need IRS help, we are teamed with former IRS agents on our staff, or go to your own CPA who prepared your return. Anyway, if you like what I've given you, give me a like, give me a comment. If you want to leave a comment, say, hey Mike, talk about this, I'm happy. Most of my YouTubes come from people who have just left a comment. So subscribe to me, do what you like. I really do appreciate you listening. Thank you.